Now, let's try to have a quick overview of financial modeling. As a part of this introduction, I would like to define what do we actually mean by financial modeling. What is the kind of relationship that exists between Microsoft Excel and financial modeling? Why is Microsoft Excel being considered as the modeler's tool? What is the state of financial modeling today? Where do we actually use the financial models? Different kinds of financial models that are going around, and primarily as a financial modeler, what would be your role? So these are the different aspects that we are going to take up. First of all, whenever we bring in the word modeling, it's a different discipline altogether. It's a different specialization altogether. And to a large extent today, the world of modeling is using spreadsheets, but of course it is not necessarily that it has to use only the spreadsheet. But because of various advantages that are being offered by the spreadsheets, we see that modeling is a discipline that is using the spreadsheet. But to put it in a much better way, financial modeling is a main part of financial analysis. So here we are looking at the interpretation and the presentation of the various inputs that go into a financial process, the inputs and the variables, different kinds of values that go into a financial transaction, that go into a financial statement. We are looking at them, providing the interpretation and output of those variables. So a formal definition, if I have to give to financial modeling, I am trying to theoretically, conceptually, I am trying to build a project or a process or a transaction. I am trying to theoretically structure it. I am going to theoretically construct it in a spreadsheet. So a project, right from day one to the ending of the project, I am going to construct that project in a spreadsheet where I'll try to identify the key drivers. So what are the various drivers of revenue at different points in time? What are the drivers of expenses at different points in time? What are the drivers of cash flows at different points in time? So I'm trying to identify the different key drivers that are going to influence this project at different points in time in future, and what are all the variables on which the revenues, the expenses, the profitability of this project is going to depend on. Along with them, I'm trying to identify the logical and the quantitative relationships that are existing between each of these drivers and variables. Right? So I'm trying to theoretically visualize what all are the factors or the variables that are going to impact a project or a process, and what is the kind of interrelationship that is existing between them. So that is what we are trying to call as a financial model. Let's try to understand that it is just not a series of financial statements, right? It's just not a series of financial statements that I'm producing. I am very seriously looking at the interactions between the various variables, the relationships between the key drivers that are driving the project, looking at different scenarios of the future. What if the variables are going to change slightly higher or slightly lower? And I am very successfully able to perform what we call as what if analysis. It is then any financial statement is becoming a financial model. That is what we differentiate a financial model from any typical spreadsheet work. Right? The more and more I am able to identify the relationships between the key drivers, come up with different kinds of presentation scenarios, and successfully be able to perform what if analysis, that is when I'm saying that I'm doing a financial modeling process. Now, why Excel? Now, what we typically see is the way the spreadsheets have grown, whether it is Excel or a couple of other spreadsheets. Of course, Excel is the most popular out of all of them. They are very flexible in terms of manipulating the data. They help us in changing the data quite comfortably. And probably all of you will accept the fact that learning Excel is much quicker. It's not like learning a programming language where you need to understand the entire syntax of it. So because of that, Excel has become one of the choice for the modelers. And the popularity of the Microsoft Office suite, the way Microsoft Office has become popular. If you really try to see, I can design the model in Excel, and wherever direct Excel formulas are not comfortable, I can use the Visual Basic for Applications VBA, writing my own programs required for creating this financial model, and I can integrate the code, if at all, into any other software, along with any other software. I can integrate it using the large Visual Basic suite, and I can create customized software applications. Or the same, probably if I require the data from some kind of a data store, I can use Access, or I can write queries like using the SQL server, retrieve the data. This entire thing is a part of the Microsoft Office suite itself. And I can make a presentation with that same using the PowerPoint, and even I can do an automated documentation and user manuals using MS Word. So you find a lot of interlinking that is present with respect to the Microsoft Office suite, and this success of the Microsoft Office suite has really helped the financial modelers choose Excel as one of the core tools as a part of the financial modeling. And even if you see right from, let's say, the mid 90s, let's say 1995 to 2015, which is a 20-year period, during this 20 years, spreadsheet application functionality has grown at an exponential rate. New and new features coming up in Excel in such a manner, they are making it very much user friendly for a non-programmer to develop the applications with quite more comfort. And that's one of the prime reasons today Microsoft Excel has become more and more popular as the modeler's tool. And if you look at the modeling as the activity today, it is really helping in making business decisions. In taking business decisions, modeling is becoming one of the important aspects, and even it is playing a very significant role in solving complex questions about the future. And what we have been observing over the past few years is the demand for experienced financial modelers is growing with time, and it is expected that the same trend is going to continue for a few more years, because it has been observed that the more you are good at financial modeling, one, you can add value to the process, project, business, and two, there is a lot of time saving as well as the effort saving that is happening by trying to visualize the entire flow at the beginning itself, and trying to consider the various scenarios that go into the development of the project and trying to do a very stringent what if analysis before getting into the execution process itself. And because of all these things, there is a good demand for the financial modelers in the industry today. So these people need to be technical, where there is a good understanding of the spreadsheets that is very much required, the different manipulation aspects of the spreadsheets, as well as they need to have a good understanding of the business, the flow of the business, the flow of transactions. They need to have a good understanding of these things to become experts in the financial modeling space. And traditionally, if I have to look at the different areas where the financial modelers are being used or financial models are being used, if you broadly look at the major tasks that go into financial modeling, either I can do a data analysis. If I am good at financial models, I can help people in data analysis. I can create different kinds of scenarios and produce the output in different scenarios so that people can make business decisions appropriately. This can help me in doing proper financial management. Any new information that is coming, the processing of the information and looking at the impact of that information on the overall viability and the profitability of the business can very well be understood and assessed. I can understand the whole business logic and develop the softwares accordingly. And even for project management, evaluating of the costs and efforts and all, I can very comfortably use the financial model. So these are the various tasks that go as a part of the financial modeling. And what we have to see is depending on for what purpose I am using, I may use either all the steps or only a few of these steps that I have highlighted above. Almost in every finance department of almost every organization, we are using the financial models. But specifically, if I have to look at, let's say in investment banking, very heavy usage in the risk modeling, option pricing models, different kinds of quantitative models are being built for various investment decisions. In the insurance industry, we see models being built for testing for insolvency. The actuarial models are being built, risk models are being built, heavy usage of simulations is being done. All this is a part of the financial modeling itself. In the retail banking world, we see funding based models which talk about whether a particular person needs to be given a loan or not, or whether a particular company is eligible for a loan and of how much. And the credit assessment can be done using credit models. Corporate finance world uses heavily in the capital budgeting space, understanding what should be the weighted average cost of capital, evaluating the financial statements which are published, a very detailed evaluation of the financial statements and assessing the intrinsic value of a particular stock, and even a lot of governance models use the financial models. And similarly, when I look at from the government and the institutions perspective, there is a heavy usage of econometric analysis, looking at projecting the various economic variables like GDP, inflation, interest rate, looking at their interdependence, looking at their impact on the overall economy, coming up with various forms of macroeconomic variables or macroeconomic models. And the outsourcing industry uses it for majorly for cost modeling, price modeling, margin models, bid models. You see, the understanding of the financial modeling on a broad scale, a good understanding of the spreadsheets, and along with that, understand the project or process or business transaction to the core, wherein you understand the different variables that are going to impact it and the kind of interrelationship that exists between the different variables, you are able to create a financial model. So I could see a financial model from the transactions dimension. If I have to do an acquisition and evaluate at what price it is worth buying the target company, I should use a financial model. I can use a financial model either for acquiring or divesting. So what should be the price for acquiring or divesting? I can use a financial model for that purpose. Or if I am trying to buy a new equipment or a new material, new equipment or a new plant or a new building, any long term investment, any capital investment, so I can very well use a financial model to evaluate the viability of the same. And when I am trying to look at the capital structure of the company in the corporate finance space, I can very well use the financial model. Then when I want to do a financing for a project, probably from the bank's dimension, which is funding that particular project, it really wants to check whether this particular borrower will be in a position to repay during the entire life cycle of the project. Will the project be profitable enough, generate the cash flows enough to make the interest payments on time, debt repayments on time? So, and at the same time, to what extent the particular project will stay within the covenants of the banks, the do's and don'ts. Even in the worst case, will the project be in a position to meet those ratios? And in the joint venture, we are looking at what could be the returns that can come to the various parties at various exit times. And we can even use it as a part of bids and tenders to assess the cost of the proposal and derive the market price from it. So traditionally every investment, every activity in the financial world is using a financial model to typically evaluate or to typically take a good decision. And so going with that, if I have to really understand what a financial modeler is doing, his major role is understand the requirement, design and build the model, and manage the entire modeling process right from the beginning of the project till the building of the model, till the testing of the model, and finally delivering the model for use in the production process. So it's a very, very important thing that a financial modeler, not just an expertise in a spreadsheet, but the more and more he has a good grasp of good financial concepts, a large amount of financial concepts, he can have a good demand in the industry. So he need to have a good grasp of good amount of financial concepts. He should be able to assimilate large amount of information, filter it to the required outcome, and accurately identify the underlying issues. So if at all I don't get that kind of understanding, if at all I don't get a kind of comprehensive process about the business and the industry, there is a good chance that I can make fundamental data processing mistakes. So what is more required along with the understanding of the business and the industry? There should be very strong analytical skills. He should keep questioning each and every number. Why did I take this? Why not this? So you need to have a good questioning kind of a nature. And if required, he need to ask the right people, the right set of questions so that the actual numbers can be filled into a lot of accuracy, and which can help in terms of decision making in a much better manner. And along with those skills, even the communication skills need to be much appropriate, where the communication needs to be done to a large set of business audience, may not be in a mathematical language, but it is more and more in a clear, concise, and cut to the chase kind of mechanism, where the decision makers can really get in taking appropriate decisions using this, using the interpretation that is provided by the financial modeler, right? So that is where the importance of financial modeling is today. So we have focused on why Microsoft Excel, what is the stage of financial modeling today, where are they used, what are the different types of financial models, and what is the role of a financial modeler in the industry today, what are the key skills that are required for the financial modeler today. Thanks a lot for listening to this session. Thank you very much.